And I'm going to do another update on gold today, but I'm going to start with the dollar here. At the very least, I wouldn't say this is a bubble, but it's at least a semi-bubble. The dollar didn't make all-time highs, but it's at least some kind of a semi-bubble, and that bubble is bursting. You see today that we're starting to move through the first major support zone, and that's an indication that the dollar is probably in trouble. And instead of bouncing strongly off that support zone, we're starting to cut through it. And if I go to the weekly chart, you can see that the bubble is even more convincing here. All right, so here's the first support zone. We get another one here at about 103, I guess. But the problem is that price just got stretched parabolic above the 200-week moving average, and now we're in a regression event. Almost certainly this is a 3-year cycle top. This won't be due to bottom until the spring or summer of 24, so it's got a lot of time yet to go down. And yes, of course there will be intermediate degree rallies along the way, but we're now in a market that is the cyclical and probably secular trend is now down into that multi-year cycle low. So I think we definitely got to close all of the gap to this 200-day moving average. And as I pointed out before, when the rubber band gets stretched too far to one side, it doesn't generally just drop back to the mean and then resume. It usually has to go quite far to the other side of the mean. So I'm going to make a prediction here that before we get our final 3-year cycle low, the dollar is going to go quite far below this 200-week moving average. I would say we're probably going to test this support zone here and maybe even break that support zone. So this is what's driving gold. It's going to drive the stock market. It's going to drive energy, commodities. I think the commodities have probably printed their 3-year cycle low, and I'm pretty sure gold, I'm pretty sure this was an 8-year cycle low in gold. And I'm watching, as I've been warning over and over here for people, you've got to forget about what happened here. We're not in this environment anymore. We're in a strongly trending environment. We don't have much further to go before I think I get my final confirmation. As I've noted in previous videos, 1900 is my final confirmation that this is indeed an 8-year cycle low, and now we're in the advancing phase. I think there's a very good chance that well, I know we're going to get our bubble phase during this 8-year cycle, but I think it may come quicker than a lot of people are expecting. As in, we get our bubble phase in gold during the dollar's move down into that 3-year cycle low, which has got about 1.5 years to run. So I think it's very possible that we could get the bubble phase in gold over the next 1.5 years. So I've warned people not to screw up this easy phase. Don't be taking profits too quickly. Think big, and like I said, you've got to ignore or forget about what happened here. We're not in this environment anymore. We're in a very strongly trending environment, and you don't want to lose your position in that kind of environment, because you get 1 or 2 days where it looks like the market's going to correct. And so you sell your position anticipating, a big move down like we saw in here or over here. And then what happens is that people that are caught on the sidelines, they're going to use those small dips to get in, so the dips don't last very long, and then you get another big move up. And that's exactly what happened right here. And granted, we had some help from the banking cartel. They're trying to keep metals and miners blocked below the 200 200-day moving average, but they're, as I've been saying, they're going to fail. They're going to win some battles, but they're not going to win the war. And so that's what was going on here. They're trying to block gold from getting above the 200-day moving average. It was even more blatant in the mining stocks, but they're not going to be able to hold these manipulations anymore. They're breaking. And so, that's what's happening here is you get these artificial attacks to suppress price, and then people that have missed this move will use any of these dips to buy to get into position. So then you get another surprise to the upside, and that's what's occurring here. And that's why these people that are, can't let go of the environment that we were in as we were moving down into the 8-year cycle. That's why they keep missing these moves. They're exiting their positions here, thinking, oh, we're going to get a big correction. I'm going to sell, and I'm going to get in lower. And then what happens is people that are caught on the sidelines, they get a gift from the cartel, a move down, and those people are buying this dip, and then you get another move up, and the people that sold get left behind. All right, so 1900 on gold. That's my my final confirmation that we indeed have left the 8-year cycle low behind. For silver, it's going to be any move to this $28 to $30 zone, and we may very well do that during this first daily cycle. We're already moving through $24 today, and as I've said, we're starting to get this kind of a parabolic look to silver, but the thing is, it's occurring very early in an intermediate cycle instead of as the ending phase of an intermediate cycle, and that is a big character change. And many people are overlooking this. They're not noticing that, they're seeing the parabolic move, and they're assuming that the parabolic move means it's going to collapse, which it would if it was late like it was here. But this is very early in a new intermediate cycle, so this is not something you should be worried that is going to collapse. This is something you should be worried that might be kicking off the bubble phase.